This is Kevin Pruitt with another episode of Rising Tide Startups. And my guests today are Chris Schultz and Ann Driscoll. Guys, thanks for joining us on Rising Tide.
Great to be with you here today, Kevin.
Thanks so much.
I love the backdrop of the house behind. They're sitting outside in Northern California and enjoying the beautiful weather. And I'm in Central Virginia and just hot. I'm just hot. It's just hot. All it is. So tell us a little bit about yourselves, guys.
Sure. Yeah, we are a married couple who's also business partners working together. We run a business called LaunchPad, a network of co-working spaces that I'm sure we can get into a little bit. And we're also raising a 8-month-old daughter. So we're in the thick of it right now. And as we like to say, we're all in on life business right now.
That's for sure.
So take a step back a little bit. I mean, you normally don't just wake up one day and just launch a kind of a co-working space, venture capital firm, the whole gamut or conglomerate or whatever the LaunchPad kind of encompasses. So kind of take us through the journey, maybe both of you independently, kind of how your journey arrived at today.
Yeah, and I think it's great to do it independently because we have different paths to working together. So why don't I start and then you can follow. I have been a sort of a passionate startup guy for most of my career. I'm proud of the fact that I feel like haven't had a job in probably almost 20 years, just although, when you're running a company, you do have a job, you're doing a lot of things, but I've been fortunate to be able to do that. And LaunchPad started in New Orleans in a post-Katrina environment. So along the way became very passionate about building startup communities and building the New Orleans startup ecosystem. So we started LaunchPad in 2009 as a co-working space in a community, and really very mission driven with a focus on building the entrepreneurial community. So along the way, I've done a number of things. We ran an accelerator. I began writing a few checks, as an angel because there was a dearth of venture capital, and sort of learned that a little bit, and have had some success there. And then Ann and I were married 4 years ago, and I moved out to the Bay Area. And one of the things that tends to happen when you move out here is you sort of reframe everything. And so a lot of cities around the country started to look a lot like New Orleans, with similar challenges and, lack of capital, but there was sort of a nascent entrepreneurial ecosystem. So we began to expand LaunchPad. We sort of expanded our vision and began to expand LaunchPad over the last 2 years. I'll cut to you and let you come at it. I'm sort of the 0 to 1 guy. Ann is the one with a lot of at scale experience. So why don't you share your story?
Yeah. So I've been working in Silicon Valley for 20 years, and I was probably, had a classic Silicon Valley view on the rest of the country, which was a great place to fly over on your way to New York. This is where you need to build your startup if you want to build a startup and build a tech company. And after about, working for great companies and also working in challenge situations where we've raised, millions and millions of dollars and have a great kitchen program, but don't really have actually a business model, you start to see that, it's not sort of, it starts to showcase the reality of what is here. And, I think my mind started to expand as I started to engage and build a relationship with Chris and the community in New Orleans, and see that there can be great companies that can be built anywhere. And I think over the last 20 years, one of the things technology has really enabled is you can use technology to enable your business, which makes it the freedom to actually build that business anywhere is really important. And so Chris and I, when we got married, decided to base ourselves out in San Francisco. And it was really funny because it also was that moment where we also started to spend more of our time not in San Francisco and actually in cities across the country. and talking to these ecosystems, and started on this path. And about 2 years ago, Chris sort of said to me, I don't know why you're out there, doing these turnarounds, these startups, or building someone else's company. There's a company right here that you own 50% of, because California is a community property state.
Yeah, exactly.
So why don't you focus your energy and your efforts on actually helping me with this mission? And all of a sudden, it made so much clarity, and it really did bring it all to life, that we could kind of start growing this company together. And the other thing is that when you run a business that, while remote in nature, really requires you to be on the road, it's a tough thing to have one person be a road warrior and the other person be beasts.
Yeah,
so
absolutely.
That started, we weren't really, we had sort of figured we weren't able to have a family, and about 6 months into the deal, we were like, lo and behold, oh my God, we're having a baby now too. And so things don't always happen in the order that you expect, but they always happen in the order that you need. And we were able to then base ourselves up here, and realized how lucky and blessed we were that we had actually started on the entrepreneurial journey, where we could have the freedom and the flexibility to run our business, to raise our family the way we wanted to, and to really be partners in all aspects of life and business.
Well, that was kind of almost the elevator pitch bio there. So there's a couple of pieces that I'm missing in my mental puzzle here. And Chris, let me touch on with you just for a second there. You talked about, kind of was an angel investor. I mean, you don't wake up as an angel investor. So something had to happen, like one of these ventures that you were involved in leading up to LaunchPad had to work. Substantially well. So were there pieces that I mean, and I think if you look back, it's like all these dots connected, leading up to LaunchPad anyway. So.
Right. Well, yes, I have my very first company that I started. I did have an exit on that. It was very much a single, a base hit. It wasn't a home run by any means, but was sort of fortunate. And you get a little bit of the bug, or you understand. Sure. Okay, here's the cycle. And
well, vicariously, I said, sure, yeah.
It gets you excited, and you're sort of enthusiastic about it. So I certainly, the path to being an angel investor was maybe not unusual, but certainly interesting. It was really born out of wanting to help entrepreneurs that I had relationships with, and friends. And I've got this concept that we talk about of being a first believer. And in when you're starting a business, usually all you hear is no, that'll never work, that's a dumb idea, people have tried that, all that sort of stuff. So you get a lot of negative energy around it. And I wanted to sort of counteract that by with encouragement and believing in people. And so I've always taken a lot of pride in playing the role of being one of the first people to bet on somebody, or to tell them they can do it. And there's a lot of ways you can do that. One being writing a check, but often it's a first customer, right? You're the first person to buy something from somebody. You're the first employee to say, hey, I'm going to join you on this journey. At any rate, there was a particular entrepreneur named Patrick Comer who was working at LaunchPad, and I was taking him around. We went on a couple sort of road shows up to meet with VCs in New York and in Boston. We went to Gillette Stadium and met with the Kraft Group, and it was fun to sort of pitch these guys in the stadium. But of course, these all came back as no's. So nobody was willing to invest. So finally, he took me out. We were standing at LaunchPad, and we walked outside one day, sort of with a hung dog look, and he put his hand on my shoulder and he said, Chris, I don't want any of those guys to invest. I want you to invest. And it had never really occurred to me to be an investor before, to be an angel investor. But I, went into my 401k, probably wrote a check with money that shouldn't have been going to an angel investment, a little more risky than a financial advisor would like. But wrote a $25,000 check, and lo and behold, the company today, we went on to close a round of capital, based on that, and now company just raised $60 million, has 400 employees, and so it turns out to be was a pretty good bet.
Yeah.
So since then have gone on and kind of continued to do it, but that's sort of the origin story around angel investing.
But I think that's a really rare approach to it, and I think a lot of people, and it's interesting because we face a lot of angel groups when we go into markets, and they typically have a very similar profile where they're either people who have maybe sold a company, or they're someone who is sort of later in their career as a lawyer or a doctor or something like that, have some funds that they can move and play around with and have some fun with, right? And in a lot of cases, because angel investing is so high risk, it's a really high risk reward, but it's also a very emotional thing. Buying into a company and doing that, and actually what we often see is people with more funds, it's hard for them to write that check. And I think the example for Chris that is remarkable is that we will decide to spend our discretionary income in a lot of different ways, right? Someone will go buy shoes. I certainly have had a very wonderful shoe wardrobe that's been destroyed by countless puppies over the years, or someone wants to take a big vacation, or someone might be more saving up for their 401k. And I think this is an example where you have been like the OG believer in other people and startups. And so when you see something and you spend a lot of time and you get to know them, it doesn't feel like a big risk. Because you actually have that insight and that knowledge. And I think you really believed in Patrick on that sense. But I think that sort of unleashed the bug that was within you, which was, well, if I'm going to, we've made some investments recently, and we're not sitting there. We're both we're at a very tight phase. We're building our own company, right? So it's already hard enough. We're raising our own funding. But when we identify entrepreneurs that we believe in, it's not a bad way to spend a little bit of money, right? And to do that without a lot of strings, and to actually do that. And you can have a great result of it. But it doesn't feel as big a gamble as, say, going to Vegas. And it's a lot more rewarding to help somebody build their business and achieve what they're trying to achieve for themselves and for their family. And so I think it is a unique thing. It's not like you were running around sloshing in money. It's been a very thoughtful approach in terms of how you identified the companies, the founders, and what we want to do. And that's why we want to keep replicating that.
That's a follow-up question to that. I love the idea of, kind of being I think the term you described was the first believer. But how do you balance that? As you're describing this guy, great guy, high morals, high work ethic, bad idea. How do you, there's a point that there is no such thing as a dumb question. Actually, there are dumb questions, and there are bad business ideas. How do you balance that with the idea? Because you're bringing a lot of, both of you bringing a wealth of experience to the table. How do you, if I'm at LaunchPad and I'm trying to get something off the ground, and I really believe in Kevin, we're gonna really get behind him, but his idea is horrible. How do you kind of massage that one with the whole idea of, hey, we're all in, we want to be behind you, we want to support you and get you rolling? And
so I think that's where it comes in, is having a partner, right? And so I think what we've realized is, and it's funny, we change the role that we play depending on the idea, and the individual. And so I think we really are thoughtful about, not everybody in the room has to be a yes person. But you need that first believer, but you also need somebody to challenge. And so there have been times when we've looked at a company and I've been like, I'm like, we need to do this. And Chris will challenge me and say, you need to be able to prove to me why we need to do that with conviction. And I'll do it with him.
Mm-hmm.
And we usually are sitting naturally on the other side of the balance beam,
Yeah.
or the seesaw, to sort of, if one person's all in, the other person actually has to come back and say, all right, let me play devil's advocate. Let me think through the requirements there. Let me challenge that assumption. And, if the challenge is then greater than the conviction, it will win.
Mm-hmm.
And if the conviction convinces the challenge to have conviction, then we'll invest. And so I think when it's you writing the checks, it's a lot easier. You can just decide to write the checks. And if we were sloshing around with a money tree, we would love to write checks to everybody. But we've actually built our discipline by working together on it. And to holding each other accountable for the conviction that we have. And I think you always say that, right? You have to, when we're looking for investors and when we're acting as investors, we're looking for conviction on both sides.
Yeah.
You want the investor who has conviction around you, who believes in you, who wants to be there to support you, who wants to get on the call and not just sort of beat you up on your financials, but help you think through how to make them better.
Yes.
And we feel the same way, which is, when if both of us feel conviction that we're passionate about this company or this organization, then we're going to be all in. And it's also a good indicator. I think it's a really good indicator when you've got two people, which is you have to sell both of us, right? So if you're not interested in engaging with both parties, then we're probably not going to be interested in you.
Right.
And that goes for the investor side as well as for people we want to invest in. And I think that's a good way of demonstrating kind of how we balance so that we do say no, right? And I think it's interesting to see over the last couple of years how we've changed from time to time. Chris will be the heavy and I'll be the heavy. And I think we balance that back and forth pretty well. But I think we realize the importance of that tension.
I mean, what a great picture, though, of the two of you together. I mean, almost seeing, opposite sides of a sphere, you can't see the backside of the moon, but she can, and vice versa. So, yeah, I'm sorry, Chris, were you?
Well, I was going to say this might be a good time in the interview to do the mini course, because I'd be happy to share how we sort of evaluate, sort of on an objective level, angel
Absolutely.
Investment.
This will be a
one,
really easy segue, and that's right. This Chris
alluded. Here's how to raise funding.
The area of our show we called the Rising Tide Micro Course, and where I just kind of step out of the way and just let our guests kind of assume the role of the professor, and we're sitting in the classroom here. So, guys, take it away, and the stage is yours.
All right, fun. So I think it is informative and helpful to sort of walk through what does it take to raise angel funding, and a lot of this applies to anything, angel or venture scale, but since we're sort of at the early stage in angel scale, that's probably a good format for us. So why don't we start with point one, without necessarily, telling somebody they have a bad idea or something that won't work. A important filter is the idea or is the business venture scale? Because so many people are working on great businesses, but they're really, they're service businesses or they're small businesses. And, you really, it just doesn't, the economics don't make sense to raise angel funding or venture funding for a business that doesn't have the potential to be $100 million business.
So the TLDR on that is figure out if your business warrants venture style capital.
Right. Figure out if that's the right type of financing for you, because there might be other types of financing that is the right way to capitalize your business. Of course, the best finance is always revenue. So, often people are sort of waiting for permission to start their business. Whereas if they just went out and found a customer that started paying them, they'd be off and running. So point one is, do you have a venture scale business? Can this be a $100 million business? And is that what you want, right? As an entrepreneur, is that what you want? All right. Step two, I'll sort of focus this around things that we look for one of the things that in particular, we look at a lot of deals outside Silicon Valley. So we have sort of a outside Silicon Valley, the rest of the country mindset. And so I do like to look at, is a entrepreneur working on something that she deeply understands, and often experience in a sector, in a business sector where she was part of a team or part of a company or maybe an executive and not a founder, and then leaves that to go build a company, is a really great profile. So contrary to sort of the opinion or the common perception that, startup founders are, the 23-year-old out of Stanford with a brilliant idea, often they are actually much more mature and experienced in their careers. And there's just something that they figured out and they said, this is it. I'm going to build a company around this.
Mm-hmm. So the TLDR on that is identify a problem that you are uniquely positioned well to be very good at solving.
Yep. Based on experience, passion, all the above, right? I mean, all the
things.
Exactly.
Yeah.
Right. It could be a problem that you're solving for yourself, or a problem that you have experience in, or you have depth in. So identify something that no one else better than you can be able to solve for.
And a great way to check against that is, am I following sort of the startup du jour phase? One point it's Uber for this, then it's machine learning, then it's, AI. If I'm just building something because it's a buzzword and I hear about it and it's sort of what the blogs are writing about, unless I truly am uniquely positioned to build that, I'm probably just chasing an idea versus something that I'm really in a position to build.
And I think on that, it really is less about the idea, right? It's not always about the idea. It's about the fact of the matter is that, it takes a while to raise funding and to capitalize your business. And in those dark days when you don't have that funding, you really need to want to do the work, because no one's writing you a paycheck. No one's buying you lunch. No one's patting you on the back for the work. So you have to really love it. And you have to be good at it. And it has to be enough of that passion and expertise that can sustain until you can really get capitalized and funded.
Mm-hmm. So point number 3 that I would look at, we would look at it, would be how big is the market? Is it a large and growing market? Sometimes people are focused on something that's really interesting, really unique, but it turns out it's also pretty niche and not that big of a market. I'll do things like ask the entrepreneur to take me to a conference and try to learn the industry, because there's so many different industries. So it's not just a PowerPoint slide that says this is $1 trillion market, but actually really digging in and understanding what the dynamics are in the market. Is the market sort of old school and it's being disrupted by technology, which is something that we see frequently around the country. A lot of, deep technical innovation is coming out of Silicon Valley, but there's a lot of industries, maritime industry or an energy industry or, market research industry that are actually based in other parts of the country. And those industries are sort of going through the software eats the industry phase.
Yeah, which is really cool. And I think that also goes back to step 1, which is, it's okay if you're in a niche market. It just might change the way that you want to capitalize your business. You may not need full venture funding. You might just need a seed round to get you started, and local investors might be enough. The idea of the matter is that, being honest about what that market size looks like and your appetite to attack it. A lot of times we see founders who will say, I want to do all these things, and the scratch head moment is, do you really have the appetite to really go for it and to really eat up that category? And so this is a good moment for you to actually, as much as I think the total addressable market slides are a little bit of BS, it's also a really good moment for you to have like that look in the mirror and say, how much of that pie do you really have the appetite to bite off? And I think that's a good centering point as you think about your market. And if it's a really big pie and you want to go for it, you want to kill it, that's a great checkpoint to communicate effectively to your investors.
Yep.
So,
All right. So you've sized the market.
So 2 more steps, and I'll try to move through these quickly. So
No
step
problem.
4.
Well, I'm moving through them quickly. But
Step 4 would be a little bit of the founder and founding team. As I mentioned at the beginning, sort of an experienced founder in a sector, but now you really dig in and, understand sort of the DNA and, drive, has the founder put everything on the line? Sometimes people are, hey, I would quit my job if you'll fund me. Well, that means you actually haven't invested yourself in the business yet. Often looking at founding team dynamics, there might be sort of somewhat of a team around it, but when you really dig in, people aren't as committed as they need to be. And, that like in a marriage is just so crucial. You've got to have a team that can work together, is in it for the long haul. You're going to be 10-year partners, and it's easier to get divorced than it is to break up a business partnership. So that team and the DNA of the team is super important.
that's true. We only have nuclear options.
Yeah.
So I think the thing on that part that's actually really important and that you're getting at is when you look at the totality of the founder, you're looking to see, is this person, all in? Are they going to be coachable? Are they someone that you can believe in, that you can write a check to? It's also really important, I think, what I've seen from some early stage founders is sometimes they don't realize what it's like to have a check written. And I think the best founders are the ones who have actually had to lose the money and have to go to their investors and explain that they lost it. That's a really important moment, because especially when there's plenty of capital that's sloshing around and you can pick up dollars here and there, you want somebody who knows that it's just not free money, right? You want someone who's actually there. And so I think that's one of the things we look for in founders is, and that's the test, which says, have you quit your job? Are you all in on this? Have you started to generate revenue? Are you waiting for permission to do that? Or are you actually just going on and getting at it? And in our world right now, we're working with a lot of foundations in some cases. And they move at a very different pace than in venture. And one of the things that we realized is that in our DNA, like, we don't wait. We just get to the point of doing business. So one foot in front of the other, and we just keep going, and we keep putting points on the board. And we just are hoping that by the time they finish all of their work, we're all kind of landing at the same point. And they're like, wait a second, we thought you'd be 10 steps behind. But if you're waiting, you're never going to actually win. And so I think our view is like seeing that drive in the founder is really critical. So you want to be able to demonstrate that. And at the same time, demonstrate coachability, right? And so it's a fine balance between how coachable am I, i.e. I'll take all the advice in the world, versus how capable am I? And you want to sort of be always balancing those two sides of your personality, because the person who thinks they have all the answers isn't going to be a very interesting person to invest in, because the investor needs to see that their role is more than just money. And the person who doesn't know anything and is waiting for permission isn't a good thing. So you have to find that tight balance that makes you really in line with your investors and the type of person they want to invest in. And step 5 is traction and growth, and just, where is the business, and can you see clear steps forward? And part of this is the sort of mantra that investors invest in lines, not dots. Sort of a misconception that you're going to meet an investor for the first time and they're going to write you a check right on the spot. Usually you'll get to know them. It'll be a dialogue, might last months, might last 6 months. And if every meeting is better than the last, if every meeting that entrepreneur has accomplished, you're sort of surprised at how much she got done and how fast it's moving, and they're sort of,
gets to be this inevitability about it. It's sort of like, okay, this thing's going to happen with or without me, right? And I think that's the way we think about our business. Then you really get excited about it and want to get on board, right?
Yeah.
Something, so that growth and traction and demonstrating movement is key as well.
I think that single line, investors invest in lines, not dots, is something that you've always said. And I think it's the single most important thing for me that I've learned, and the single most important thing for anyone thinking about investing, which is every single time you got to put points on the board. And if that line keeps going up in the right direction, then you'll likely be able to achieve getting funded. And it's okay. You'll also hear no along the way. You can't let that discourage you, right? You've got to have lots of people that you're talking to. You got to be putting points on the board. You got to be showing progress, demonstrating conviction. And if that line keeps going up, then the good news is your business is doing better, even if you haven't yet raised your financing. And so I think if you take away one thing, it's Chris's people invest in lines, not dots.
I love the way that you kind of summed that up. And as you were saying that, I was kind of, thinking, Shark Tank or Elevator Pitch or, all these shows where the investors may think it's a great idea, but they're like, you can talk about, perceived market share. You can talk about any number of things, but you've shown me nothing. This is your pre-revenue, right. Or even the idea that, hey, yeah, I think it's a great business. I'm just not passionate about it enough as an investor to invest in it. So yeah, I don't want to have a diaper factory in Egypt. I'm sure that there are diapers in Egypt. I just don't have any desire to invest in that. But I really like the kind of the word picture that you gave about this. It's almost the FOMO, the fear of missing out. If that line is going up and to the right like a hockey stick, you're going, hey, they're going to go there with or without me. So why not jump on the train? Because as an investor, this is a great investment. I can see it already. It's just, I'm really just catching the inertia of the wave as it's going by. So, and I really appreciate you guys drilling down on that. And I mean, it's really interesting to see you, as you guys work together and you say something, you go, okay, well, here's actually the takeaway line of what he just,
I know.
the 5 steps. And so it makes it much easier for me to capture these things as we're talking. But so you've already given me a quote, but I would like to drill down a little bit and just say, is there a quote that you guys are driven by? Do you have a personal quote you got taped up on your laptop somewhere, you got on your office wall or whatever? But I mean, I don't need anything beyond investors invest in lines, not dots. I mean, that's a start right there. So, but is there anything that drives you that it's just kind of a life mantra?
Well, I've got one that my dad had sitting on his desk his whole career, and it's run the race with perseverance. And to me, that just sort of speaks to entrepreneurship and life. That it's a long game. There's ups and downs, but not getting discouraged and keeping your head up and keeping moving is the key to it. Every day we're above ground, and every day I'm not working for somebody else is a good day. So yeah. There's ups and downs, but run the race with perseverance is one that means a lot to me.
I think I haven't really thought about what my framing piece would be, but I'll say 2 things. One is that actually notion of lines, not dots, is probably the thing that is the best motivator for me to just keep that energy up, keep the focus on where are we going and what the next pieces are. And I never really thought about it in that context, but it really is. Mm-hmm. But I would say also my life mantra would be just say yes. Mm-hmm. And I think the notion of being open to new ideas. We always say to people, don't invite us to something because we just might say yes. Usually we will. And we're the first to hop on a plane if someone invites you to go to Hawaii, and the first to say yes and drop everything and rearrange it if there's a great band coming into town. And I think that notion of just say yes is something that carries us through. It has new meaning now when we have a baby and we have a few other things to manage, and it's not just ourselves, but that, I think that just keeps us open and alive when it comes to life.
Guys, there are so many different directions I could head right now. I do want to honor your time. I mean, I could talk to you all. I could sit here and listen to you all day. But there are two areas that I kind of really want to touch on. I mean, one of them is kind of let's look, back and kind of see some lessons that have been learned, and what if you could go back 10, 15, 20 years, whatever that magic number is, and if you had one piece of advice that you could give yourself that you think would be a game changer today, what would it be from each of you?
It's a funny question, and I think it's interesting. Maybe it just talks to our different types of psyches, but it's really funny, the journey that I've gone through. There have been many mistakes along the way. There have been many places that I could have been more optimal. I could have been more organized. I could have followed through harder. I could have picked a different job or taken a different step. But the reality is that where I am today, I'm really happy about. And each one of those moments, each one of those lucky breaks or heartbreaks is actually what got me to where I am today.
Mm-hmm.
And so I guess what I would say is that run the race with perseverance.
Mm-hmm.
Be passionate about where you are. I think the thing I would have said was maybe listen a little less to the ego and a little more to the heart. And I think, that's something that I've probably learned in the last few years. And I've been acting in that way, but I think it took me a long time for it all to sort of come to fruition. And I think for me, I would say that is that it's a little less about the ego and it's a little more about the heart.
Okay, Chris, if you'll hold your thought just for a second, I want to touch on that really quickly, because I've done an interview a week since January of 2018. And that's the first time that someone has almost, and you almost said it completely. I mean, you kind of circled around a little bit, but almost said, I don't think what advice would I give myself? Because I'm really happy with the journey that I've had up to this point. Have I made mistakes? Absolutely. But everything's been like a piece of the puzzle that has fit and made me where I am today. What a refreshing, outlook, Ann. I mean, I just really want to affirm, what you just said, that because it really spoke to me. I mean, as you were saying that, I thought, well, of course we could give ourselves, we had that aha moment. I wish I had a V8, type,
Yeah,
head.
Plenty of V8 days in my past.
But Chris, I don't want to knock you off your game. If you had something I really want to hear it. But I just didn't want to buzz by that without just stopping and affirming how awesome that perspective is that you just gave us. So.
Yeah, I mean, I think actually it probably speaks to either whatever work I've done to have that perspective. I don't know that I would have had it a couple of years ago, but I do think that it also probably talks to my psyche in some way. There's probably a little ego in there that says, I'm good enough as I am. But we were reading a book together called by Jerry Colonna, and he talks a lot about kind of that breaking down of what would you have done differently as you're thinking about leaders and your leadership capability and who you are. And I was remarking on that moment of sort of saying, like, there are definitely things to improve, but overall, I think it's important for us to actually just really like who we are.
Yeah.
There's not a lot I can do about it. I can't change the past.
Yeah.
I can only make the future better. And I think I've always been a very, forward-looking, keep it going, and that's I think been my mantra. Maybe that's my mantra. Can't change the past. Only make the future better.
Yeah.
And it's not that there are things that you would do different. I mean, there are obviously things you would do differently, but I just wanted to really, touch on the fact that you were focused more on the actually where I am now and where the path that's led to this is as important as it is to me telling my 25-year-old self or 15-year-old self, something different. But Chris, I didn't mean to
Go to
take
the
your
gym
time.
more.
So.
Maybe go to the gym more. I'm going to say that. Go to the gym more.
All right. Well, I again, acknowledging how happy I am where we are today. And
That's right. Me too movement there for Chris. Yeah, that's right.
Yeah, has led us, has led us here. Has been
What
wonderful.
advice would you give your younger self?
I think the advice that I could have used here was, and particularly as an entrepreneur, was this, sort of the swing for the fences, the think bigger, the be ambitious.
Mm-hmm.
And because I think, sometimes when you're starting something, initially you have this, at the end of the day, what one of the things that I've realized is when you're taking risks, it's almost just as, that a big risk is kind of just as likely to work out as a small risk, right? So, every time we've, raised capital, it's almost just as hard to raise, $25,000 as it is to raise $2.5 million. You have to be ready for it. You have to be capable of it.
But zero is still zero.
Yeah, exactly. The swinging big and ambition. And I remember once I was sort of in affiliate marketing early in my career, and which is sort of internet traffic and that kind of thing.
Mm-hmm.
It's not really building a startup per se. And I went to this conference for it in Las Vegas, and Jason Calacanis was a speaker and said to the audience, he's like, everybody in here is way too smart to be doing affiliate marketing. You guys should all get out of here and go build real startups, right? And it was just like a little bit of an aha to me of like your skills when you're an entrepreneur and you're doing something are really worthwhile and meaningful. And so apply them to something that you really want to do, something thinking big.
Well, I like I said, I could keep asking questions all day long, and the sun would go down even in Northern California. But if we can wrap up today, just touch a little bit just on kind of the current state of LaunchPad and where you're headed with LaunchPad. I mean, I know that you're in New Orleans, you're in Charleston, and headed toward Nashville. In Nashville, where else?
Sure.
Where else are you going with this?
Oh, well, you're going to be digging in on this one, I'm sure, Kevin. But basically, New Orleans. So right now we're in New Orleans, mm-hmm. Nashville, Memphis, Newark, New Jersey, and Stockton, California. And we are looking to move into 20 locations by the end of 2020. And our goal and mission is to create a deeply connected network of co-working spaces across the U.S. and markets that we call momentum markets, with the idea that we can support entrepreneurship and their goals and entrepreneurs' goals and objectives in these markets. We can basically support cities in attracting the best and retaining the best talent in their markets, and entrepreneurship can be a way forward for folks. As part of that, we're raising a venture capital fund that we're going to start raising for in Q4 of this year to be able to invest dollars into these markets and into these entrepreneurs that we see on the ground. And we've just recently launched a foundation to support underrepresented groups within our cities, to be able to give them scholarships and access to our resources, to our curriculum, and to really be able to support entrepreneurs and remove the barriers to access for entrepreneurship. Because we really believe, and this is a mantra of Chris's, that for us to have a strong economy, entrepreneurship really is the way forward. It is the antidote to automation. It is the answer to our communities that need to be revitalized. It is the way to give agency to people and to strengthen the local and national economy.
Amen, amen, and amen. As an economics major in university, I second that, what you just said.
All right.
Absolutely. There's no question. No, absolutely. It's not a Republican thing. It's not a Democrat thing. It's not an independent thing. It's an economic thing. And it is, you are absolutely right. You're absolutely right. So describe real quick, kind of the emerging markets, or is this the idea? Is this, are these cities that you're seeing a strong tech growth in? Is it specifically surrounding tech, or is it, I mean, it sounds like to me it's all over the country as well. It's not in any particular region of the country.
It is all over the country. We focus on mid-market cities. The terminology we use is we call these markets momentum markets.
Mm-hmm.
So these are cities that have strong sort of cultural and historic assets, places where people might have grown up but had to leave to go get a job previously, and through entrepreneurship they're able to build their business there. Places that when you live in the Bay Area, you go to these cities and you're like, oh, you can actually still afford to buy a house there.
Yeah, exactly.
So, right. So so we're big believers in these great American cities. One of our core focuses is around a core value, diverse and inclusive, not exclusive. And so this means diversity on every level, including making sure that our LaunchPad locations are representative of the communities we serve, but also business diversity, because we believe that there's many people that are working entrepreneurially. So it's not just tech and startups, that's
Right.
a subset of it. Small businesses, professional services, people working remotely, freelancers,
Right.
podcast media, all of us, everybody doing this are sort of looking for agency in their lives. They want to do something they care about, that interests them, and they're making a go of it. So
and they want to be part of a community.
Yeah, and they want to be part of a community. And so that diversity is a key component of every LaunchPad location.
Do you look at the market that, like, I take Richmond, Virginia, for instance, and that's the market that I'm in, and it probably
Chris's hometown.
Really? All right.
I grew up in
anytime.
Richmond. Yeah, thank you.
As you know, it's slightly different from Northern California, but when you look at a market like Richmond, I mean, so let's say we have a pretty good sized co-working competitor in the area. Would that come into play as you're looking at the market as well? I mean, obviously kind of like your market study, a feasibility study or whatever, or are you saying actually our approach is different than a kind of a typical co-working space, and we're going to serve a different market, we're going to have different targets, that type of thing? How do you kind of balance that?
Yeah, that's a great question. We certainly do market analysis and look at sort of supply of co-working in a market, but I think that there is a differentiation to LaunchPad. The way we think of the space or the sector is that there will be multiple co-working brands and independents. We think of it's going to play out very similar to hotels.
Yeah.
Different flags, not all hotels are called Hyatt, and not all co-working spaces will be called WeWork. The other sort of philosophy we have is that we want to come in and we really care about ecosystem development. So we want to come in and be additive to the community, to find a unique role that we can play. And we enter a market with humility, knowing that there's a lot of people who have had sort of boots on the ground that have been working to build the entrepreneurial ecosystem, that have come before us, and how can we help, and what role can we play when we enter the market?
That's great.
We one of our core values is we go long, so don't worry, we'll go over time, no problem. But it also really means about we often we approach things in a very collaborative way.
Mm-hmm.
I think co-working in general, it's not the easiest business to run. It's certainly, you're dealing with 100 CEOs in every single location.
Yeah.
It's not huge margins. Oftentimes that landlord's the first one who's doing the least amount of work and getting the biggest check at the end of the day. And so I think, we realize that we're all doing the work of supporting the ecosystem. And so we certainly aren't looking to be big competitors. We really are looking to be a part of it. And there's enough guess what? There's a never-ending supply of entrepreneurs, and we all have a fixed amount of office space to sell. So it actually ends up being not so bad. We obviously don't look to put in a big space in a big saturated market where there's too much co-working space on the market and no one's really interested in it, and all of a sudden it's like a bunch of noise. And that's not our focus, but I think that there's plenty of great cities out there that have a need for somebody else to come in with a different angle, who can be another player in the city, and who can be another collaborator and build an ecosystem. Ecosystem work is also really hard, and it's a thankless job for most people. And I think what's been really neat, we do this thing called Ecosystem Summit, and what's really neat about that is you start to see that the challenges that are faced in Richmond, Virginia are the same challenges that are faced in New Orleans or Kuala Lumpur. And at the same time, the people who are trying to solve those challenges on the ground and who really care about it are often the unsung heroes. The guy running the co-working space, he's not walking away with tons of money in his back pocket every single month. But he's doing it because he actually cares about the work there, right? For a lot of years, you never got paid for a lot of the work that you did building the platform and doing those things, because it was just your human nature. And I think all of these great cities and all of these entrepreneurs, there is a huge community component that people are naturally already doing it. So as long as you come in with the idea of wanting to be additive and go long in the relationships there, people will kind of make a seat for you at the table. It's when you show up and you kind of, want to be the only game in town and you have no respect for the work that everybody else is doing. That's never a winning solution in any game, in any industry, in any work. And so I think it's the same in our work. But we're really lucky because the people who do the kind of work that we do have a tendency to share our values and our mission. No one goes into this space thinking like, this is how I'm going to become a fat cat. They go into it thinking, I need office space, and my fellow startup folks, why don't we get together and make a co-working space and see if we can make that work? Because it'd be great to have our own virtual water cooler. Those kind of people are our kind of people. And so, those are the ones you end up finding in these cities. And that's my hope and my dream, but I think it plays out really nicely. And each city has its own flavor. Each city has its own community. And we just, we really do approach things, and we go places where they want us. So in a lot of cases, the mayor's coming to us and saying, you can be really helpful. The economic development folks are like, we're trying to recruit Amazon, but we'll take you, okay, if not. But the reality, smart cities know that supporting their local entrepreneurship community is a winning solution. And so they're looking for people who can come in and act as leaders and have maybe a different perspective that changes the provincial tone that can sometimes happen. And make the city a place that everybody wants to feel really proud of. And I remember that in Louisville, which may or may not be one of our future markets. But I remember hearing from an executive there at a really amazing company, and she's like, I really want you guys to come be part of the city because you represent a network and access to other places. And I want my city to be a place where I really want to live. I was in London. I want to live in Louisville, and I want Louisville to be this vibrant, amazing, forward-thinking city. I don't want it to be a provincial place that's just a small town where I grew up and I can have a nice house. I want it to be world-class. And so I think there's so many people in this country that want their city to be world-class, and it can be.
I love that, and I do hope. I can make a case that Richmond should be ahead of Louisville on that list, but I do hope that Richmond is somewhere in the planning stages. And if not, there's got to be some sentimental vote, if nothing else. There's got to be some sentimentality that plays into heading that direction. But
we would love to be in Richmond. We actually we're just talking to LeVar Stoney at this mayor's event in Hawaii this summer. So it's on the list.
We've got a lot of reasons. Chris's mom and some really close friends who give us a really good incentive to want to be over there in Richmond.
Well, as far as I know, there's only one big player in the market, and I mean they seem to be doing just fine as far as capacity is concerned. So I think that there's certainly an abundant supply of those needing co-working space in this area, and there's a lot of exciting things happening in the area that are just
Yeah.
from the startup community but yeah, I love the idea that there's these cities virtually popping up all over the country, and virtually all over the world. I mean, we are digital nomads, and we can work anywhere we have laptop and a Wi-Fi, Wi-Fi.
And that's not going to change.
And that is not going to, matter of fact, that's going to continue to increase. And if Elon Musk has anything to do with it, he's going to have, internet, all over the planet at a high rate of speed. So, well, guys, I like I said, I could sit here and just continue to ask questions and just sit back and drink my Coke and enjoy the conversation. But is there anything that I haven't asked you about that you want to touch on, or you think would be just a great way to wrap us up? And then just tell us where's the best place for people to find you online.
Chris?
All right, sure. Well, I'll wrap up with this. Hopefully we've sort of given you a little bit of a sense today of how fortunate we feel to be able to work together. Finding a great business partner is a challenge, and finding a great life partner and spouse can be a challenge. And when you get to combine them, it makes life pretty special. So, people ask us a lot about what it's like to work together as a couple, and it's not for everyone, and obviously you have to be aligned on your interests and compatible, and able to work together. But it's been really fulfilling for us, and so enjoyed getting a chance to talk to you today, Kevin, and I enjoy getting a chance to work with you, Ann, and I'll let you have the final word.
All right. No, that sounds great. We LaunchPad, www.lp.co.
Yep.
Is our URL, and we are going to be interested in coming to more and more cities with coming to communities across the U.S. where there's lots of people with pride and cities with soul.
All right. Well, so have you tried to buy LP.com at any point in time? Is there somebody out there that had that forever and just won't sell it?
Yeah, I don't think it's happening.
We just love the shortness of LP.co.
I do too. And
We're one of the OG.co
working space too. I mean, it just fits perfectly.
That's right. We were an OG.co customer.
Yeah.
There you go. Well, guys, as we wrap up today, I want to just, as we close every chat we have on Rising Tide, is just thanking you guys for playing your part and just helping all boats rise in a rising tide. And Chris, actually, I heard you use that very phrase on another interview you had not long ago. And as I was listening to it, I thought, wow, he's prepping for the show here. So as we ended it with this, just thanking you again for just helping out today. And it's been great chatting with you. And we just wish you all the best in the future. Thanks again for coming on.
It was really fun.
You're welcome. We really enjoyed it.
Thanks, guys.